Well, we were actually looking at the numbers as far as the intraday trading is concerned. It's thrown some very interesting trends. I don't know if these trends are encouraging. That's something I will leave to Alex and Sajid to decipher. And speaking of which, Alex, take it away.
Absolutely. Thanks so much, Agam, for handing that to us with the interesting toss that you did, because it is an engaging conversation and Sajid has some answers for us on that front. What we're talking about, of course, is a SEBI report that talks about the trading activity of individuals from FY23. That's the financial year ending March 2023. Remember, this has to be seen as trading in the intraday cash market, not in derivatives. That report that the SEBI put out was the one earlier where it said 9 out of 10 people trading in derivatives lost money, individuals. Here, I think it's interesting because it depends on how you say it. Sajid, 7 out of 10 people trading intraday in the cash market lose money, but equally you can say 30% of individuals trading intraday in the cash market make money.
The number could be much more. But,
exactly.
But, you know, let's put the things in perspective. From FY19, 18, 19 to 24, we added nearly 6.5 crore new investors into the market. But the thing is that from 3 crores to 9.5 crores, that's what the number is. The survey takes into account top 10 brokers and the samples from them. And the total number of intraday traders there have increased from 15 odd lakhs to 69.8 lakhs. That's nearly 1% of the 1.5% of the total base which got added. So the survey is very focused on the intraday trading part of it, but it does not talk about how the new investors have done in the market or what they were doing, especially with respect to how they were investing in the cash market for delivery or investing, which is the way of doing it, and whether they were a high participant in the IPO market and they used the profit from there to go into intraday market.
So, for example, it may not give you the perspective of somebody who's buying today and selling next week, just as an example.
Exactly. It doesn't give you that. It only gives you intraday trading, and it also doesn't give you a perspective of whether these investors made money in investing and they are plowing into intraday,
right?
Or is it just an intraday trade which is
are
happening
only
doing
intraday?
So the study is very skewed in that sense, but that's a caveat which I want to make before I say that. Okay, if you look at intraday traders, 71% made losses.
Is that bad?
It's not as bad as you think, because it takes you through the entire process of the market learning curve. It says that the more you stay in the market, the loss proportion comes down, which basically means that there's a learning curve for everyone come into the market.
The more you stay in the market, in that, the more time you spend trading in the market. Not holding period.
No. The more, I'm talking intraday here.
Yeah.
So if a person came in FY18 or 19 and is there till FY23, the proportion of losses have come down from 71 to 58%.
Sure.
Which basically means it's a learning curve which is there for every investor, which is there, and that's what markets teach you over a period of time. It also tells you that over 48% of them are younger crowd, which is under 30, which means a lot of college first-time jobs are entering into the market, and they're using their household savings in intraday or in investing in that sense. There are certain good things like the proportion of female making lower
I was
losses.
going to ask you about that.
Yeah, I mean, it says that the proportion of female investors have made lower losses compared to male investors.
But it's been
and it also says that married people made more lower losses than...
Married people made lower losses is what... So, okay.
Compared to singles. Simple.
Okay, so the influence of the female gender, it has been said, no, without using any stereotypes, but it has been said that the risk-taking, the nature is not to take as much risk as the male generally does. And of course, we're not making generalizations, we're not using stereotypes. That has been proven in studies.
But it also gives you an indication. So what's the takeaway? It's basically, fuels to the entire concept of how household savings are moving away from traditional banking deposits to markets.
Yes.
And that's been reflecting in the RBI's household savings data as well, right? The net financial asset flow to equity and mutual funds have gone up from 35% to 47%.
And there are people engaged in only trading. That's what this throws up as well.
Yeah, so roughly around 27% have taken up trading as their occupation.
How do you get that?
It doesn't say that very clearly, but it says that large investors which are trading 100 to 500 transactions are they've been categorized as large, and then there is more than 500 transactions. So in an intraday trade, you cannot go put a trade and then go off, right?
Yeah.
So you have to constantly monitor. So the assumption is that if they are going to do 100 to 500 trades in the market, or more than that, then they have to in a year.
Okay.
Then they're doing at least one every 3 days, or they're doing at least 2 trades a day minimum. That's what we are saying. And for intraday trader, you have to buy and sell square off. So you have to be in front of the screen and doing that. And
But couldn't you do that from an application on your phone?
Still that's going to be a full-time job, right? You're going to monitor your prices. It's not as easy as going to be. So if you're going to put your price and then a price comes and goes away, you're not able to sell, right?
Fair point.
You have to wait. So they have made it as a full-time occupation, which basically means that roughly around 1 crore of new investors have taken up trading as a occupation in our country now in the last 4 years.
What, according to you, is the conclusion? What is the intention behind the sending of this report by the regulator?
So the regulator is discouraging intraday trades.
Okay.
They're saying that you should be looking at investing rather than intraday trades here. But the flip argument could be that investing is a process, and intraday trades can help you in learning the markets much faster as compared to of course you make losses, and that's why it gives you a very interesting number where it says that small traders account for small traders means traders who have less than 5,000 average trade size account for 47% of it, the bulk of it. And if you add between 5,000 and 25,000 average ticket size, it comes to nearly additional 26%. So nearly 80% of traders are those traders which are there. But it also gives you a very interesting thing, the trading costs. So people who are losing money in the market, 57% of the losses are accounted by trading cost. And people who are gaining in the market or making profits in the market, their profits have been reduced by 19% because of trading costs.
Right.
Which basically gives you a takeaway that the discount brokers are making huge money. Simple.
That is not the conclusion that I expected that we would draw, but it is an important conclusion nonetheless. That brings us to the end of this particular edition of the Editor's Cut.